Live from Bloomberg's world headquarters in New York, I'm Katie Greifeld in for Scarlett Fu.
And I'm Tim Stedebeck. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
Here's what's at stake today. Crypto prices getting hit in today's trading session as investors remain on edge ahead of President Trump's deadline for Iran tonight.
In just a moment, we're going to be speaking with Joseph Chalom, the CEO of Sharplink, about all this price volatility and the dramatic drop seen across the board for digital asset treasuries.
And we'll give you the latest headlines surrounding Polymarket and Kalshi as once again, prediction markets come under criticism.
That's all ahead over the next hour right here on Bloomberg Crypto. First, let's just get a check of where things stand when it comes to digital assets amidst this volatility in the overall market. Look, it's a risk-off day across the board. Stocks are under pressure. Oil is higher on concern that the war in the Middle East is intensifying ahead of President Trump's deadline for Iran to agree to a ceasefire deal. And that is what we are seeing when it comes to crypto today. Bitcoin down about 2.4%, Ether down 3.2%, XRP down 3.3%, Solana down 3.8%. Still, we should take a step back and just remind everybody, Bitcoin up close to 4% since the start of the war. That was at the end of February. Compared with the S&P 500, Katie, that is down close to 5%.
Yeah, so really interesting there to try to untangle what the narrative is when it comes to Bitcoin. But I'm taking a look specifically at strategy because this week it registered a roughly $14.5 billion unrealized loss in the first quarter as the value of its crypto holdings fell. Right here, we're taking a look at its market cap since January 2025 with the price of Bitcoin. That is the blue line here. And you can see that they really have moved in tandem from the peak back in October now to that dramatic low where we are right now, Tim. And that makes a lot of sense because strategy, it holds a bunch of Bitcoin.
Then that Bitcoin worth less than it was just a few months ago. That brings us to Treasury Trove, a dive into the world of digital asset treasuries, better known as DATs. Bloomberg's Monique Malima covers crypto companies, including strategy. She joins us live from our Toronto bureau. Monique, can you just explain how in recent months strategy has changed the way it's raising money to buy this Bitcoin versus what it did several years ago?
Yes, so strategy has had to pivot a bit. With the declines that we've seen in Bitcoin and with strategy shares, there's been less investor appetite than there used to be. Strategy used to be able to command a higher premium for its Bitcoin holdings and easily raise capital to fund more purchases. Previously, they were doing this through share sales and debt. And now they've moved more towards their preferred shares. What this means is these shares offer yield or dividend equivalent to the investors. And that's been something that they've come to rely on more as investors want kind of assurance of some type of return, especially as these Bitcoin prices have been falling. And we also saw strategy say earlier last year that they were going to hold off on doing as many share sales unless their premium fell above a certain level. And that was because those share sales dilute existing shareholders, but they've had to turn to doing more of those once again, just to be able to raise the capital for their purchases because they have to really meet investors where they are right now as they're seeing these declines.
Well, Monique, I'm taking a look at the A&R page on the Bloomberg terminal. I see that 21 analysts on the sell side cover strategy as a stock. What are Wall Street analysts saying about this company right now and its prospects going forward?
So Wall Street analysts have become less bullish on strategy. We've seen their price targets before last year. The price target was around over $400 for the average analyst. And now we're seeing it around $307. So this is quite a decline. But even with that, most analysts do still have buy ratings. And $300, it's still strategy shares more than doubling. But this is quite a decline. The analysts are less optimistic that we're going to see these high returns to Bitcoin prices as quickly as previously thought. We've seen some analysts lower their Bitcoin targets for the full year, and they're more in kind of the wait and see phase, thinking that it's going to take some time before we really get back to those high prices we were seeing when strategy shares were trading at like $470.
All right, Monique, really appreciate the update. That is Bloomberg's Monique Malima, and it's not just strategy. Other DATs have declined over the past year as well. Bitmine, Nakamoto, American Bitcoin, and Sharplink all way down from their highs last year. Now, our next guest says that not all DATs will survive to see 2027. Joseph Chalom, he is the CEO of Sharplink. He's a former managing director at BlackRock, and he joins us now. So let's start with that prediction that not all DATs will survive. What gives you the confidence to say that Sharplink will?
Sure. So we've been around as a digital asset treasury since last July. We were able to raise several $billions of capital invested in Ether, and from day one make that productive. I think what you're going to end up seeing is a handful of Ethereum digital asset treasuries who are professionally managed, who've raised significant enough capital to get actual scale, and most importantly, making Ether productive. We give a lot of credit to Michael Saylor for launching Strategy, but Bitcoin is not a natively productive asset. Ether, if you stake it in the Ethereum ecosystem, can yield nearly 3%. And we've been making our Ether productive for our investors from day one.
Still, we've seen Ether fall, just around 60% since from last year's highs. What is it going to take for Ether, in your view, to recover price-wise?
I think we're seeing a bit of a divergence since last October, where we had a massive deleveraging from a lot of retail and hedge fund perpetual futures leverage in the ecosystem. That takes a couple of quarters to work out. At the same time, we are seeing a moment that matters in institutional adoption, and most of it is happening in the Ethereum ecosystem. You're seeing rapid growth of stablecoins, not just in the US, but abroad as well. And we're on the verge of a tokenization supercycle. Larry Fink has said is the next great financial revolution. And when you start seeing the largest exchanges, banks, and asset managers really dig in and start not just experimenting, but deploying capital on chain, that is what I think is going to be the next driver of both Ether, but more generally of the Ethereum ecosystem.
So I'm wondering about why Ether is the winner in your view there, because there are a lot of ways for tokenization to sort of live, and there are a lot of big bets on this. Obviously, not everybody is betting that Ethereum will power it. Why do you view that as being the winner in tokenization?
For my 20 years at BlackRock and the last 5 or 6 having led digital assets, we know institutions, and I mean capital I fiduciaries, care about 3 things. They care about security, and Ethereum has the largest validation and economic security regime since the beginning of blockchain. And it has the most trust and liquidity. Over 50% of all stablecoins are transacted and secured on the Ethereum network, almost a function of 5 to 10 times of the next largest chain. And importantly, in the tokenization front, most of the largest institutions, from Franklin Templeton to BlackRock, Robinhood, are building on Ethereum because of that trust and liquidity. And most importantly, this is going to be the future rails and the global ledger for the settlement of most financial products in the future.
And we'll actually be speaking to someone from Franklin Templeton later this hour, so a little bit of a tease there. But let's talk a little bit about the disconnect that seems to be forming about what we're seeing on the network and the token's actual price in the market. Because, I mean, you described the activity on the network. It seems like, of course, there's a lot of momentum there. And then you take a look at the token's price, you wouldn't necessarily know it. So, I mean, what basically sort of accounts for that disconnect that has formed?
Well, I think we're in the early stages of tokenization of most of financial assets. It's not just myself and Sharplink speaking our book. You've heard Larry Fink in Davos explain that all $14 trillion of their fiduciary assets at some point will be tokenized. And Ethereum is the toll road to tokenization. If you take a step back, we are probably in the bottom of the first inning of tokenization. There's about 32 billion of real world assets tokenized out of a total market of about 700 trillion. And once you start seeing the likes of New York Stock Exchange, NASDAQ, DTCC, talk about tokenizing assets and allowing wallet movements and instant settlement, it's very hard in the technology space to build a more efficient system and ultimately go back to the rails we have today, which are delayed. Settlement takes place in 1 to 3 days, depending on your region. And that creates a lot of stranded capital and counterparty risk that tokenization, through its programmability, particularly on Ethereum, will secure.
I want to know what it's like being at Sharplink and what looks different from institutional adoption on the other side of the table? Because you spent, as Katie mentioned, many years over at BlackRock. That's where you built partnerships with Coinbase, BNY, Securitize, and more. What's it like being on the other side of the table?
Look, I think it's worth mentioning your charts tell the whole story. Crypto is a very volatile ecosystem, but so was the internet and most startups in the early days. And the volatility is not a defect, it's actually a feature. And in my 8 years in crypto, we've seen at least 5 or 6 of these deep consolidation periods, each time followed by a higher high. And it comes back with better builders, with higher standards. What's interesting about leading Sharplink is when I started, we were about 5.5% institutionally owned. The rest was fast retail looking for quick exposure. To date, as of December 31st, we're 46% institutionally owned, with Fidelity being our largest shareholder, meaning the large institutions recognize we'll go through periods of price consolidation, but they want exposure through a public equity to this long-term trend. It would be like investing in the internet in the mid-90s or Amazon, in the early days as they were changing the market structure of online commerce. And institutions recognize it's easy to own this through a publicly listed NASDAQ equity, and they're less concerned about daily volatility. They want exposure to the long-term trend.
Joseph, good to chat with you. Thanks for joining us on Bloomberg Crypto. Joseph Chalom, CEO of Sharplink. Well, coming up, the IMF ringing a warning bell as tokenization, about the risks that it can bring to financial markets. We're talking about tokenization. That's in a new report. Also, we're going to talk crypto regulation. Sandra, CEO of the Global Blockchain Business Council, joins us in just a few minutes. Also, to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
We've already been actively involved in the tokenization of equities. We participated in the tokenization of the Figure secondary a few weeks ago. So that's live and that's happening within our institutional securities business. So I can already tell you we're off and running on that. I think you'll see us hit the ground with some other projects, hitting some of the other asset classes later this year in 26.
That was Amy Oldenburg, head of Morgan Stanley's digital asset strategy, sharing a bullish outlook for tokenization opportunities in the market. The IMF, though, on the other hand, giving a stark warning in a recent report. It said that moving Wall Street's trading infrastructure onto the blockchain could accelerate financial crises. Tobias Adrian of the IMF writing, quote, "Stress events are likely to unfold faster, leaving less time for discretionary intervention." It brings us to our token moment for the day. Bloomberg's Isabel Lee joins us now. So Tobias Adrian kind of laying it out there, but this has been a concern, when talking tokenization, that, okay, if 24/7, low liquidity periods of time, there might be some challenges. What specifically is the IMF warning against right now?
So tokenization is becoming this big buzzy word. It's the hot topic. It's basically when you convert traditional things like stocks, bonds, equities into blockchain-based tokens. So what he's saying is this isn't a marginally small change. It's a meaningful structural overall shift, and that it may accelerate a global financial crisis that's faster than regulators can accommodate. And I feel like tokenization, everyone talks about it, Katie. We get pitches every day, probably you too, Tim. But there are many ways to tokenize something. Like one example is when you just make a digital twin, which is what NYSE and the DTCC are exploring. I mean, it still lives in the traditional rails, but there's a digital twin.
Right.
And others, for example, actually making something in the blockchain. So there's just so many different ways. And I feel like for now, it's just being molded.
And we've certainly seen it sort of enter the ETF world as well,
Yes.
where, we live and breathe and
Yes.
prosper. How does the IMF sort of envision, though, a safe tokenization world? Because this certainly feels like the direction of travel to some extent.
It definitely feels like it. To your point, we get Franklin Templeton already debuted ETFs that trade in crypto wallets. We have WisdomTree tokenizing money market ETFs. So for them, they're mapping out 3 scenarios. I'm going to try to read it out. One is a world dominated by private stable coins. Another is a fragmented patchwork of different tokenization railroads, so they say, which is what I think we're seeing for now. And another is a coordinated system in which it's anchored by CBDCs. I think that's not what we see for now. But it's just interesting to see the evolution. And real world assets that are tokenized are some $20 billion. It has grown 300% from last year. But that's really nothing compared to our ETF world in Katie's newsletter. Every week, you're right, $20 trillion ETF world. So it's small, but it's definitely rapidly growing.
Bloomberg.com/ETFIQ newsletter. Isabel Lee, great reporting.
What day does it come out?
That comes out on Fridays.
Okay.
Hopefully around 2 p.m.
Hopefully, yes.
Focus. Coming up, though, when it comes to the crypto show, we're going to take a look at what names are moving in the session. Plus, Franklin Templeton, as we were just discussing, announcing plans to grow its holding in digital assets. Incoming head of Franklin Crypto, Chris Perkins, he'll join us next. This is Bloomberg.
I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are under pressure with oil on the rise. That's as concerns build that tensions in the Middle East are intensifying. Just ahead of President Donald Trump's deadline for Iran to agree to a ceasefire and reopen the Strait of Hormuz. Meanwhile, crypto is moving lower as well. Bitcoin, Ethereum, and Solana are sliding, caught up in the broader market volatility. That follows a series of attacks on Iran's infrastructure, with investors closely watching the lead up to that ceasefire deadline. And in company news, health insurers are rising. United Health and Humana are both moving higher after the U.S. agreed to boost 2027 payments for private Medicare Advantage plans by roughly 2.50%. That's more than initially proposed and offers some relief for an industry that's been under pressure from federal cost-cutting efforts. And finally, Apple shares are down after Nikkei Asia reported setbacks in the engineering test phase of its foldable iPhone, potentially delaying production and shipments. Shares are seeing their biggest drop in nearly 8 weeks. Those are your midday movers. I'm Nora Melinda.
Well, Franklin Templeton, as we've been discussing, growing its financial footprint. The firm announcing plans to buy 250 Digital Asset Management, an active crypto investment manager, to expand its blockchain VC investments and crypto offerings under the new Franklin Crypto umbrella. Joining us to discuss, I'm pleased to say, is Christopher Perkins. He is CEO of 250 Digital Asset Management and the incoming head of Franklin Crypto. First off, great to see you in person.
Great to see you, Katie. Thanks for having me.
So this is sort of the inverse career path of Joseph Chalom, who, of course, was at BlackRock for decades and then went into crypto. You're going from crypto into TradFi. So talk to us a little bit about that transition and what Franklin Templeton, of course, a traditional asset manager, is hoping to accomplish in the crypto space.
Sure. Joseph is an old friend. He's doing great things over there at SBET. Love him. I actually had 3 careers. I started off as a U.S. Marine, and then I went into 15 years in Wall Street. So I have a lot of traditional experience as well. Went full-time into crypto 5 years ago because I couldn't stand it anymore. This was such defining technology, right? You can put private property into the internet. You can settle in real time. And I just got the bug, and I said I had to commit my life to this. So I've been full-time in crypto for 5 years. And what's the first thing that you realize? You learn to live in 24/7 markets, right? Which is an incredible opportunity and an unlock. We're seeing that come to reality right now with tokenization. And so, look, Jenny Johnson, Sandy Call, they've been in this space since 2018. People don't realize how long Franklin Templeton's been around. And their ideals, their vision is completely aligned with crypto natives like myself. What do they want to do? They're ready to scale. When you think about it, right now you have risk for not being in crypto. Back a couple of years ago, it was like, how dare you if you step into this space? But now, what if you don't have a solution? And so around the world, institutional clients need help. They need native guides. And Franklin Templeton's ready to scale. That's the idea behind this deal.
Well, you make a good point that when you think about, Wall Street type firms, Franklin Templeton was relatively early when it comes to crypto. I want to pick up on tokenization, though, because there seems to be, a lot of optimism, a lot of hope about the promise of tokenization. And then you have the IMF, on the other hand, warning about it. And I wonder, where you fall in that debate.
Yeah, honestly, I think I should warn the IMF. I'm a fiduciary, okay? What does tokenization do? It unlocks 24/7 markets. So as a fiduciary, if I want to buy an equity, do I buy the old equity or do I buy the tokenized equity? If there's enough liquidity, I have no choice. I have to buy the token. Why? Because when Trump invades Venezuela on a Friday night, how do I risk manage my book? When he kicks off Epic Fury on a Saturday night, what do? I want to be able to manage my risk. So tokenized products are superior products. They unlock 24/7 risk management. So I would caution the IMF, the real risk here, I was at Lehman Brothers. I was on the floor of Lehman Brothers when it went bankrupt. And the real risk is liquidity risk, typically. So which asset class are you going to want to use? The one that settles in real time or the one that's asleep on the weekend? That's the risk. It's the old system that's the risk.
Chris, it's obviously you're a true believer, but you've had a foot in TradFi, you've had a foot in crypto. You understand both of these worlds. How much of your life right now is going around and spreading the gospel, convincing people to see your view?
It's changed, right? I think a few years ago I'd have to say, hey, this is why it's such a big deal, the light bulb one, and we call it red pilling. By the way, I was just telling you, Tom Keene down on the sofas below, I think I may have red pilled him finally. But now people understand, wait a second, there's something here. What are these stablecoin things? Wait a second, I can now settle any place in the world real time. That's actually good for our national security. So now it's more like not convincing them, but helping them navigate this space.
But I think a lot of people's exposure to the technology has to do with price. And if they see volatility when it comes to price action, then does that turn them off from the underlying technology and the opportunities that are there? Is that a danger?
It's a great point, and this is a young asset class. It's a frontier asset class. Has there been issues and fluff? Absolutely. But what our job as investors to do is to really understand fundamentals. And someone is like, you know what, there's too many tokens, it doesn't work. Like, what do you think about tokens? It's not about the token. The token's a wrapper. It's about what's underneath. So our job is to identify that fundamental value.
So just before we go in the last 30 seconds, in terms of looking across the landscape right now, what are the opportunities that are actually exciting to you?
I think it's an incredibly constructive setup. Sentiment, all-time lows. You guys hear everyone, the sky is falling, this and that, right? The fundamentals underneath are very, very strong. Clarity Act, feel very good about that getting passed. You know, I think the interest issue has been solved, and there's a likelihood that that gets passed. But irregardless, you have incredible chairman, Atkins, Seelig, they're creating that foundation, right? The last thing I'll tell you is that Bitcoin, despite this geopolitical pressure, right? Who would have ever guessed the resiliency that it's demonstrated? You know, our president just said he's going to destroy civilization tonight, and Bitcoin's hanging in there, right? So I think, you know, and I'm not political, but when you see the resiliency of that asset class, it's now starting to mature.
Chris Perkins, CEO of 250 Digital Asset Management, incoming head of Franklin Crypto. Coming up next, will quantum computers destroy blockchain tech? We discuss right after this on Bloomberg Crypto.
Welcome back to Bloomberg Crypto. I'm Katie Greifeld alongside Tim Stanovic.
New research from Google warns that quantum computers may be able to break some of the cryptography protecting Bitcoin and other digital assets sooner and with fewer resources than previously thought. Google researchers published a paper last week saying, quote, "We urge all vulnerable cryptocurrency communities to join the migration to post-quantum cryptography," that's PQC, "without delay." Vildana Hayret covers cross-asset and digital payments for Bloomberg. She's an editor behind this story. So why should we be so scared of the big, bad quantum computers?
Are you scared?
I'm super scared. No, actually, if we look at the price of Bitcoin, it's exactly flat since this research paper came out. However, it was making its rounds online on X, where a lot of the crypto community sort of talks to each other, and hence it caught a lot of people's attention, especially because it was Google researchers who were behind this report. All of it is theoretical as of now. We should be clear. It's not like Bitcoin or Ethereum are in some sort of imminent threat. But the idea is that, you know, quantum computers will be so quick and so powerful in the future, maybe sooner than some anticipated, that they might be able to break through sort of like the cryptographic encryptions that underlie a lot of the crypto industry, the crypto networks, and that potentially could put wallets and Satoshi Bitcoins at risk of getting stolen or sold.
Yeah, well, okay, so that was the part of the story that got my attention,
Right.
Because there's this hoard of Bitcoin that's just been sitting there attributed to Satoshi Nakamoto that just hasn't been touched. I mean, like, what, more than $60 billion worth?
More than 60, something around $70 billion worth of Bitcoin that hasn't been touched in something like, I think, 15 years or so. And so the threat potentially would be that some of that stockpile or that stash could be accessed at some future point where quantum computers are able to break through and get to them. But again, still very theoretical. The idea is that if somebody does access it and sell it, it would obviously impact the price tremendously to the downside. We cite an example of the German government selling $2 billion worth of Bitcoin a couple of years ago, and that impacted the price. And so this would be just to an even greater scale.
And, Tim mentioned the PQC, that is the post-quantum cryptography. And
you guys are experts now.
Thanks to your story that you edited.
Yeah, thank goodness that was put out. So the researchers also urged the community basically to cut avoidable risks. I mean, in their mind, what does that entail?
Right, so you could do nothing, right? Maybe that's that actually is one of the options that they lay out. There's a couple of other options, which is do something to try to quantum proof the network and try to avoid this theoretical scenario, future scenario.
All right, Vildana, it is lovely to see you. That is Vildana Heinrich. She is the global team leader for cross-asset and fintech when it comes to Bloomberg News. But let's keep the conversation going with Adam Back. He is the co-founder and CEO of Blockstream. He's also considered a pioneer in crypto technology because in 1997, he invented Hashcash, which is, of course, a predecessor to Bitcoin mining. He says that the quantum threat is, quote, decades off. So let's talk about that a little bit, Adam, that, okay, when it comes to this quantum risk, perhaps it's real, but in your view, perhaps not imminent.
Right. I mean, the current hardware, so, the Google paper is talking about algorithmic improvements. It doesn't bring with it any hardware improvements, right? And the current hardware that the companies doing the research have is extremely basic. It generally doesn't have any error correction. The biggest calculation it's performed is to factorize the number 21 into 7 times 3, the sort of thing that primary school children can do and practice. So the hope they have is that with continued research, the hardware will get faster and eventually be able to tackle serious problems that today's computers can't. But today it's much slower than a calculator or something extremely basic.
So you're essentially, I just want to make sure I have this right, Adam. You're essentially saying that this is not a thing at this point in time to be concerned about. We're years away from that. If that is indeed your position, when should we be concerned about quantum computing and Bitcoin?
Well, I think that we don't have to agree about the timeline for quantum computers to become powerful enough to be a threat to the spending mechanisms for Bitcoin transactions, because the prudent thing to do is to prepare Bitcoin and give people the option to migrate their keys to a quantum ready format and to have, let's say a decade in which to do that. So I think for that reason, the longer time that Bitcoin users have in order to migrate their keys for custodians and exchanges to move their coins to a quantum-ready format, the safer it will be. So the reason to work on that now, and Blockstream research has been doing exactly that and actually implemented some quantum-ready signature format into Liquid, which is a Bitcoin layer 2. And Liquid has a long track record of bringing first to live use features that later got added to Bitcoin. So there is some precedent for that.
So I want to throw something else at you, and it's the idea of AI and maybe AGI at some point. Is that a risk, in your view, to Bitcoin or to crypto?
No, I don't think so, really. I mean, it's sort of like computer-aided design. It's something that can help researchers, organize their thoughts and assemble things to consider, but not in itself, no.
And when it comes to quantum, I do want to go back to this paper because as we were just discussing with Vildana Heinrich, I mean, the researchers did have some recommendations for the crypto industry, shifting towards that PQC, geez Louise, and also to cut avoidable risks. I mean, again, in your view, this is not imminent. This is a far off sort of scenario here. But even still, I mean, do you think it's worth thinking about how to quantum proof here?
Yeah, I mean, we have been. So Blockstream has a 20-person research team that's been, working on this, all of this year and into last year, and published a number of papers, and a number of other researchers in the Bitcoin space have done likewise. So I think it's just that, negative news sells. So they get a lot of attention for quantum hardware research or algorithmic research by talking about it in Bitcoin terms, whereas the people like ourselves who have a 20-person team publishing papers, implementing things, putting them live, that doesn't grab as much attention. So I think there's a kind of mismatch between the recognition of the work that's being done. And so, things are well underway. There's a draft BIP, which is related. We've implemented and put forward a couple of different proposals, shrinks and shrimps, which are different optimized versions. And I think the other thing people should bear in mind is that the post-quantum signature technology has only very recently been standardized by NIST. So that was only in November 2024.
Adam, I just want to, in the last minute that we have with you, sort of make a hard pivot to understanding adoption worldwide of Bitcoin, because you've been in this space for so long. Sovereign adoption of Bitcoin, we think of El Salvador and others. Where is it right now as a tool, as a strategic asset versus a tool that undermines monetary sovereignty if you are a country thinking about or actually adopting the tech?
I mean, I think it fits into the kind of hard money category. So the digital gold is probably the best way to understand it there, which is, it's a different asset. Of course, countries benefit from having different economic policies and, their central bank setting the interest rates and things like that. So that's something that continues in parallel with a hard money like Bitcoin or gold. And Switzerland, for example, there's some discussion about having a referendum to reintroduce the gold standard, because it's the last major currency to leave it, and this time around to add Bitcoin to the mix.
Adam Back, co-founder and CEO of Blockstream. Do not be a stranger. Please do join us again soon. We got more Bloomberg Crypto coming up in just a few minutes. Sandra Rowe joining us next. This is Bloomberg.
We're just about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, U.S. stocks are under pressure with oil mixed. That's as concerns build that tensions in the Middle East are intensifying, just ahead of President Donald Trump's deadline for Iran to agree to a ceasefire and reopen the Strait of Hormuz. Delta Airlines shares are falling, with the company saying it will hike fees for checked bags between $10 to $50 a piece, as surging jet fuel prices push carriers to ramp up fees and ticket prices. After the increase, the total fees are $45 for the first bag, $55 for the second, and $200 for the third. In M&A news, Gilead Sciences is falling after agreeing to buy a German biotech company in a deal worth up to $5 billion to boost its portfolio in cancer drug development. And finally, U.S.-listed shares of Universal Music Group are climbing on news that after Bill Ackman's Pershing Square floated a plan to merge the company with a U.S.-traded acquisition vehicle. Ackman claims the deal could dramatically boost Universal's valuation. Those are your midday movers. I'm Nora Melinda.
Time now for Political Exchange, where we cover the intersection of the policy and the crypto industry. Crucial regulation in the works. The Clarity Act stalled in the Senate Banking Committee. Last week, Coinbase Chief Legal Officer Paul Grewal said that he expected a deal to be reached within 48 hours, but that did not come to fruition. One of the insiders following this bill's progress is Sandra Rowe, CEO of the Global Blockchain Business Council. She joins us live from Washington. Sandra, we got to ask just about your view of this and where it falls in terms of timeline. I'm just curious where you think, or if you think this will get passed. If you do, what is the timeline of it?
So I'd like to reference something called congressional math. Okay. And when you look at, and those in DC know what I'm talking about.
I don't know if I learned that in school. What is it?
I know, right? I think everyone should actually be taught that. So there's only a limited number of time. Let's just say hypothetically, the major sticking points do get worked out. The draft that's currently sitting on the Senate side, by the way, there's several, not just the one, but there's one that's the Senate Banking Committee is working on. That needs to then pass through the Senate, and it needs to actually get floor time to debate. And frankly, if you look at the math on the calendar, it's limited. And you've got a number of other priorities that have now taken, first place or second place now. And so the likelihood of anything passing anytime soon, I would say, go to the congressional calendar and look at the map.
So anytime soon, meaning, okay, maybe it doesn't happen this spring. Does it happen like 2026? Does it happen? Does it happen before the midterms?
I think realistically, we have advisors who sit on the Hill every single day and let us know what they think. We're hearing everything from, if we're lucky, maybe July, maybe later than that.
And so with that in mind, I mean, you think about the regulatory picture when it comes to the United States, you could make the case that it still feels pretty fragmented at this point. I wonder, in your view, what that means for development overall when it comes to the crypto industry. Is that holding that progress back?
So when I look at the last 10 plus years that we've been in the space, I will say that the private sector is remarkably resilient and has advanced and grown as much as it can. And the private sector tends to keep innovating, even when there is regulatory uncertainty and lack of clarity. But I will say we need to look at what has been happening on the CFTC and SEC side. I think the announcements that have come out, the collaboration that's occurring, that has been very, very helpful for actually injecting a lot of clarity into the U.S. market that we just have not seen before. Yes, we absolutely need some sort of market structure bill to be passed out of Congress. But in the absence of that at the moment where there are delays, I think we do need to look at what the SEC and CFTC are doing.
And it's worth pointing out, of course, that you serve on the CFTC's Digital Assets Markets Subcommittee here. Sandra, I am curious, from the conversations that you are having with policymakers, do you have the sense that they better understand, just the industry and the technology underpinning it better than they did, say, a year ago, 2 years ago?
That is where I can give you an emphatic yes. GBPC exists because one of the reasons why we exist is because we're here to help educate regulators around the world. And we have seen a marked uptick in interest, improvement in understanding. And frankly, there are some regulatory bodies out there that really are advancing a lot of the thinking around how do we best also risk mitigate digital assets as rulemaking legislation is being passed.
At the council, you have 500 institutional members across 100 different regions. Katie mentioned you're on the CFTC's Digital Asset Markets Subcommittee. You have a good idea what's happening globally. I'm curious if the regulatory fragmentation that we see across the globe right now is a threat to institutional adoption, or does it do the opposite? Does it create this useful competition across regions and get people in different parts of the world to move more quickly?
I think you raise an excellent point. There will be those who tell you that by design, we should have local regulations that adhere to local, laws and also different market segments. There are those also on the other side who will tell you that this is a global tech. It does not respect borders. It will go where it needs to go. And having regulatory arbitrage is actually a very bad thing. And so from our standpoint as GBBC, we are here to help support, I think, things that should be common. We should have common definitions and language. When I say digital asset, it should mean relatively the same number of things that you think it means. And also, if I say crypto assets, it should also have a certain definition that we largely agree. The words do not need to exactly be the same, but they do need to share the same consensus. And I think this is where we do need to think about where do we need global harmonization, and then where do we need the local regulatory frameworks that work for the laws in that given jurisdiction.
Sandra, I want to spend most of the last 30 seconds we have with you on tokenization, because this is really the meat of the conversation happening in the space right now. Very briefly, are you seeing it in bonds, private market funds? Where are you seeing the most traction when it comes to tokenization?
So tokenization of all real-world assets is being discussed around the world. But depending on where you go, so for example, I don't know how many people know this, but in the United States, digitized bonds is actually very low on the totem pole. People are talking about tokenizing money market funds. They're talking about even tokenizing equities before bonds. But if you go to Europe and Asia, that is where actually the tokenized bond market is actually issuing on-chain issuance.
Global Blockchain Business Council CEO Sandra Rowe, we are out of time, but you got to come back soon. We appreciate you joining Bloomberg Crypto. Coming up next, prediction markets. Polymarket issuing an apology for a market it says should never have been posted. Also, Kalshi, close to a legal win in the state of New Jersey. We're going to bring you the latest next. This is Bloomberg. Let's get to the odds. It's an in-depth look at the booming growth of prediction markets. Last week, we spoke with Jason Tross, CEO of Smarkets. He founded the prediction market platform back in 2008. Here's what he had to say about the industry now.
What's new is the amount of money that's coming into this industry especially from the sports side of things, but also this financialization of everything is adding to the froth of the industry. And what we're really excited about is bringing a regulated approach to this industry. We think some of the competitors in the space are getting a little bit over their skis and offering some markets that they shouldn't be offering.
And another example of that just happened over the weekend. Polymarket has issued an apology after users posted a market over whether an American pilot shot down over Iran would be rescued or not. Catherine Doherty covers prediction markets for Bloomberg. She joins us now. Kat, what goes into whether or not a contract is posted and, like, you know, who decides on the language around a contract on these platforms?
So it first starts with the companies themselves. They have teams that are going through all the different iterations of, even with political contracts, if you think about a yes or no, will a candidate win, let's say, the presidency, you have to go even 4 layers deeper of things like, will they change their name during the election process? Will they die? They have to explicitly write rules behind every single contract to think about how various outcomes can impact the contracts that they're listed. So that's starting with the base level at the company. And then for the companies like a Kalshi and others that are CFTC regulated, they have to submit the contracts to their regulators asking permission. And the regulators at the CFTC, they're able to shoot down the contracts that they don't agree with. And already it's explicitly prohibited to list contracts that are tied to terrorism and war. And so that's what we've seen a lot of controversy around. Some of these contracts for platforms that are not regulated in the U.S. by the CFTC, that has been where a lot of the political discord has centered on. This Polymarket apology, they did remove and say that this market should not have been posted, and they're investigating, they say, into how it might have slipped in their internal safeguards. So that's going back to the company level of making the decision on a case-by-case basis.
So we have about a minute left, but you touched on where I wanted to go, and that is, you know, how is Kalshi handling this versus a Polymarket, depending on where they're actually regulated?
So you've seen perhaps a lot of bus signs that Kalshi has put forward saying, we do not list contracts tied to terrorism, for example. They're being very explicit about the line that they're drawing because they are, in fact, their exchange is regulated by the CFTC in the same way that the CME and CBOE are listing derivatives contracts that are also under the same legal and regulatory jurisdiction. Polymarket has their offshore offering, and they are building the U.S. version of their platform that is also regulated under the CFTC. And those are the lines that have been drawn. So you think about those platforms that are, again, offshore, anything outside the U.S. versus if you are offering to U.S. customers, you are with a license regulated by the CFTC.
A big thank you to Bloomberg's Catherine Doherty. Check out all of her coverage and the entire team's coverage at Bloomberg.com. And also a big thank you to Katie Greifeld for stepping in for Scarlett Fu here on Bloomberg
it was
Tech.
a delight, and I'm pleased to say that Bloomberg Crypto will be back next week, hopefully with Scarlett Fu and Tim Stanovic. This is Bloomberg.